the channel. All right, welcome, ladies and gentlemen. Welcome to another training today. My name is Prince Ikilowe. We're going to have a look at the market, seeing how we can analyze the market together, see if we can even have trades to take together. So let's do the analysis. All right, now the first thing we're going to do is to look at the market. This is step index. So let's look at step index on the daily time frame. On a daily time frame. Now, the first thing you want to do when you're analyzing the market, the first very thing is to go to a higher time frame. Most people make the mistake of going to 5 minutes, 15 minutes. No. Even if you're a scalper, go to a higher time frame. All right. Now, the first thing you want to do first, after you go to the higher time frame, you are going to identify key levels. Like here, this is the key level. What is the key level? A key level is a place where price gets and bounces back repeatedly. If you look at this point here, price has been touching here so many times. So that is a key level. Now we're going to use this. We're going to use trend line to analyze market. Trend line. We're going to use trend line analysis. So is this market a downtrend or an uptrend? Who can tell me? Those of us in the Zoom call, is this market an uptrend or a downtrend? Who can tell me what this market looks like? Is it an uptrend or a downtrend? Based on uptrend, good. So step index is on Simon Jerry. You're writing something on the wall. You're writing something. Uptrend. Okay, good. The market is an uptrend. So what you're going to do is to do this. You're going to draw your trend line. All right. This market is an uptrend until it breaks out of this particular trend line. Until it breaks out of this particular trend line. For now, it is still an uptrend. So look at this here. It seems like the market is struggling to either break from this place, struggling. So now that the market like this, I'm not going to click sell again. Because if you be clicking sell, clicking sell, clicking sell, look at it, I've been struggling multiple times. Most of the time, if market touches a zone multiple times, it means that the market may break through that particular zone. If you see a market touching somewhere multiple times, that shows that the market may likely break through that zone, like this zone now here. All right, because this is when sometimes when price form a zone, maybe a double to 1, 2 here, you come by a touch the zone, come by a touch the zone again, it may sell. I do sell like that. But if you see market touching multiple times in a zone, you have to be very careful with your selling. Now, until price breaks out of this zone, this line, and then retests, there is no downtrend. The market is on uptrend because it may get to this point, all right? Or it may just go out of here. So let's see this market as an uptrend and waiting for the market to break. Let's go to 4 hours time frame and see how the 4 hours time frame reacts. 4 hours is also telling us that the market is still up. It tries to come down for a long time, for days now, but here has been the major zone here. Market has been struggling here long time. So I'm not going to do anything about this market now. For now, I'm not buying, I'm not selling. Because the market is ranging. It's ranging. You can see how the market is. You can't do anything in a ranging market. Because when you range like this, it may break out of this zone or collapses. Anything can happen. So when it is the ideal time to sell this market, the ideal time to sell this market or even buy this market If you have to buy this market, that means the market has to break through this zone. It has to take this high. It has to take this high, this particular zone. It has to break it out. All right? Break out of this high, come back to retest this zone. That's when we think about buying. For the sellers, it has to break through this particular trend line. This is it, an uptrend trend line. It has to do this. If this market come down, you have to be patient with this market. Very, very patient. All right. So you have to allow market to do this. It will break out and then it will retest. When you're waiting for the breakout and retest, look out for use 4 hours time frame to watch the market. Let the market break out and retest. Like this. It will do something like this to break out, and then when it retests, that's when you take your trade from this angle here. At that time, you'll be using maybe, let's say you're watching with 4 hours time frame to watch the breakout to happen. I'm going to give you another example of that breakout and retest strategy. Let me delete this. Let's say when the market was coming down, if the market has to continue the downtrend, if the market has to continue the downtrend, it will give you, it will be coming up and down, up and down, up and down till you get to this breaker, right? Now you wait for it to break out from here before you think about selling this market, because selling here is too late. Selling here is not, it's ranging. Look at it now. Even when you get to this point, ideally, this is the right place to sell, not even here. Ideally, this is the right place to sell. Those of us trading support and resistance. When you get to the support level, resistance level, you think about selling. But the way this market is selling here is still very risky, except you don't know the risk and be be trading on the range market. People trade on range market. You sell here, you buy down here, you sell here, you buy that. People do that, but it will disturb you very well. It will disturb your emotion, because sometimes you look as if it's going to break, sometimes you look as if it's coming down. All right. So the best thing to look at for this market is to wait for breakout and retest. If the market breaks out of this zone and then retest, that's when you think about selling this particular market. If you do this, and make sure you allow the retest to happen. Don't be in a hurry. If you see the market just break out, if the market gets here, just break out, going down. Don't just jump and enter the sell. If you want to jump and enter the sell, that will be a very fast sell, maybe just scalping. But ideally, allow the market to break down. Let it come down. Be patient. Let it come down. When you're watching it that time, you can be watching it with maybe even 30 minutes or 15 minutes. Let it have several candlesticks coming down. Several candlesticks coming down before it will now come back again to the zone. If you come back to the zone, all right, you will now think about selling. At that time, you can go back to the 5 minutes time frame. What are you doing with the 5 minutes time frame? You are looking out for, because market, for instance, let me give you an example. Okay. Now, let's say this is your test. Let's say price was, where will I use it? Okay, let's say price was coming down here. This is your test now, for instance. Let's say while you're waiting for the retest to happen, like this now, all right? Price broke out. Let's say the retest is coming. The market is coming to test this place. When the market is coming to test this place, it's good to use smaller time frame to now observe what happened. Why in the small time frame, like 5 minutes for you to have an early entry? You want to see the candlestick changes. You want to see how the candlestick reacts, because you get there's the way market will coming down here, coming up, getting to a trend line. Remember, your trend line is your trend line. You're not the owner of the market. Anything can still happen. You can still break that trend line. So what happened is that when you use lower time frame to see, you look at the candlestick formations, candlestick patterns like this. When you see a candlestick that is showing you, maybe if once you get to that trend line, if it is a 5 minute candlestick you're using, you've seen that the 5 minute candlestick closes in red. That's a show that the market is ready to turn. Because there's a way the market will get to the trend line, your own trend line. It will just break it out and keep going to the inside. Let me give you an example. Let's say market get to this trend line. As it's breaking up to this trend line, because breakout and retest, right? Once price get to this point, it keeps coming inside this trend line. No stop. So when price is coming down here, once it is close to your trend line, you switch to 5 minute time frame to see what will happen here, whether it will react. Once you see some reaction that price getting to pause and the candlestick changing to red, allow that 5 minutes to close. Or you can even go to 1 minute time frame once, but make sure that it is on that your trend line. That's why you have to use daily time frame to see the exact point, the trend. Like this now, because of this thing, you have to also include that particular fake out here. It has to be, you have to include this because this was a fake break. So once price gets to this point, as price is approaching this point, you are very conscious of the way the candle as the candle price gets to this point, you know that it's about to turn. But that turning should also include patterns, candlestick patterns with smaller time frames. I just showing you sign that it's going to go down because the way you press button here to sell on the sniper, the market did not stop. Yeah, it keeps going inside. Sometime after a year before you see candlestick, before it will now come down for a buy. It will take you out. So watch out for candlestick pattern. That's why you must go to a lower time frame. For instance, let me show you another market here. For instance, something like this. Something like this now. Let me remove all these things. I'm going to so let me remove this. Now this is V50. The market is on a downtrend. When the market stopped becoming an uptrend is when the market broke out of this place. You see, when the market, this was how the market was before now, but the market broke out of this trend line. Remember, use daily time frame to know the direction. Daily is very perfect. Daily, weekly, but daily is my favorite. Use daily to see how the market, that stepping desk is the same thing. Now, when the market breaks out to this point, as it is coming to this trend line, what I mean is, as it was coming back to this trend line, you have to switch now to a lower time frame. A lower time frame, you see what happened here? So if you are watching out for breakout and retest, look at what Apple price broke out. It broke out, right? Like now, it broke out, it came back to retest. You see that when you go to this point, it did not stop. It entered a little bit to the upside. This is daily, this is 4 hours time frame. So 4 hours time frame, let's say you're watching with 1 hour. Let's see how the 1 hour works. All right. Let's assume that we are watching this market, right? The market broke out. The market broke out. I like to break out well. Like this was a fake breakout. This can fake you out and give you stop loss. This was a fake breakout. This was a fake breakout. Look where the market had breakout. When the market broke out to this point, all right, you can see that when the market got to this point, it didn't stop. It went up again. Because this is your own line. That's your own line. Your line, it may be different from someone else's line. It may be different from the way the market operates. It's you that drew the line. You are not the owner of the market that draw a line and make you tell yourself market must turn from here. It must not turn from there. It must either push it out or even below the line sometimes. Sometimes a little bit below or a little bit above. So in this scenario, it gets to the point. Imagine you place a trade here. Maybe your stop loss is here. It would have taken you out before coming to the downside. So the best thing to avoid such kind of fake breakout, or to avoid such kind of where's that line right now? To avoid that, you go all the way to lower time frame to look for your entry with candlesticks. These are things I've done, and I'm teaching you this with experience because experience is the best teacher. Experience is indeed the best teacher. Oh, this is not. Experience is the best. So I'm telling you this with experience. Okay, this is the place we are talking about. Let me just be using the. But if I go down to a lower time frame, we may not see the particular zone. So what I mean is that once you align, I'm not sure I get what I'm saying. When price break out of your zone, allow it to break out. Let it break out well. Don't rush to sell. Don't rush to sell. Let it break out well. As it's breaking out to come back to test this zone, watch out for candlestick patterns. Watch out for candlestick patterns. Is it reacting? If you just press a button because it has touched your zone like this, most of the time you enter trouble. Sometimes it work for you, but with the experience, I've seen that it is better you wait for candlestick to show you, because the market can still break out of this your line, like what it did here, and then before coming down. So watch out for. That's why you must not use 1 hour. 1 hour is too long. Maybe like 5 minutes. Seeing if that 5 minutes candlestick will close in red here as it gets to your time, your trend line, seeing if that 5 minutes candlestick close in red. All right, then if it close in red, all right, and maybe the one that is closing, for instance, this one here, if you see something like this, after something like this happen, all right, and then you see another candlestick red closing on that line in red, that's a sign that the market is ready to turn from that place. That's when you trigger your sell. You have results. You wait for candlestick patterns like this kind of, you see what they call engulfing, pin bar sometimes. Pin bar is when, we'll talk about pin bar, maybe candlestick patterns tomorrow, but you see candlestick patterns are very, very important for you to observe. There's a book called Candlestick Bible. That book, read that book, you understand all these things I'm explaining here. Candlestick Bible is that book, they will tell you how it works. When you see a market on the line like this, and you see candlestick patterns like this, before you place your sell, that will give you better results. Because a market can reach here, you think it will stop, because it's your line. It's not the market that draws the line, it is your own line. It may not stop, it is just poof, take you out before coming down. So watch out for candlestick patterns before you place your trade. So this is how you analyze the market. So let's see how we are going to analyze this market as well. This is on a daily time frame. Now, because this market is a downtrend, right? You now draw your trend line like this. This is trend line analysis. You draw a trend line like this, but this market has been respecting this trend line. Let's go to 4 hours time frame. I mean, if you are getting what I'm saying, if you are getting what I'm saying, can you type 111? Are you understanding what I just explained so far? Using candlestick patterns to know if the market is actually moving to the downside. Using candlestick patterns to check the movement of the market. If you understand what I just explained, can you type 111? Okay, good, good. So when you have a market drawn like that, make sure that if you wait for the breakout to get to you, breakout and retest, watch out for candlestick patterns to give you direction. Now, this is the downtrend. This is the downtrend market. This is your trend line. When market go to this trend line, ideally, please help us drop the records version, okay? Ideally, once you have seen that with daily time frame, you have seen that this market is an uptrend, a downtrend market. Daily has showed you that the market is a downtrend because it has broken through our uptrend that retested. Sales have been happening, higher high and higher lows have been happening. So what do you do now that the market is down here? Are you going to sell like that? No. Let's go to 4 hours time frame to still see the direction of this market. 4 hours time frame. Now, anything we analyze on this group like this, on this Zoom meetings, go and be watching that particular market. If you're interested in making money from the market, go and analyze on your own. Just think about what we did and then be following the market like this. Now, the way the market is now, this is where ideally you sell. When price get to this line, you sell, right? But to avoid fake breakouts, that's not where you sell. That's not how to sell. How do you sell? When do you make sell decision? Let me use here as an example. When price get to this point, to avoid fake breakout, you draw this line. Selling here is good though. It will make make more money, but most of the time, if you sell here, the market may take you out with fake breakout before coming to the downside. So to avoid that, when you see a scenario like this, that market has touched your trend line to sell, you draw this candle trend line. What do? You are waiting for breakout and retest of this with a lower time frame. At that time, you can be using 5 minutes, 15 minutes to watch for the breakout. In fact, 5 minutes. I like to use 5 minutes. Let it break out and retest with that 5 minutes time frame to avoid the fake breakout that you may. If you sell here, market keep coming down, because once market get to this point, you just place a button and sell. Sometimes it's favor you, but sometimes it will not take you out. First, you blow your account before it will come down. So to avoid you blow your account, even when you see market get to this trend line, ideally, the best thing to do is to draw this kind of trend. For instance, now, the market is not here. The market is not here. We are not selling anything until the market has to, let me use 1 hour time frame to see this market, because here even is even ranging. Let's see with 1 hour time frame. Okay. Now let's assume that the market will get to this place again. Let's assume, because now if you can see the market is ranging, don't sell because the market is there. All right. You don't want to sell because the market is there. You want to sell when the market breaks through that trend line. Like now, here, let's say you made the market like this. So instead of just placing a sell because the market has gone to this trend line, it is better you draw something like this. Like now, this is the trend. This market has broken through this trend line, right? Let it come back and retest. All right? Yeah. Or like now, what he did here, if you are watching with a lower time frame, you see that there was a breakout and retest here. You see, there was a breakout and retest here. And you can see that these are the touches of the retest that happened. So it is better you draw your trend like this, allow you to break out and retest this candle trend line, all right? Just for you to have an entry. You allow this to happen. Look at, if you had allowed this breakout and retest to happen before you join the sell, this movement that is happening now, you would have made some profit. Maybe your stop loss would have been up here, all right? Your stop loss would have been above here because you are selling from this point. You are selling from this point, but you allow this breakout and retest here, and then your stop loss would have been a little bit above, and then you ride down with the trend. Take your profit in the next zone. But when the market is tired of selling, don't sell, sell, sell. For instance, this market is close to this place. This market may be falling to this zone, this particular zone. It may fall to this level. So if you're looking out for selling for this market, watch out for this breakout and retest strategy I'm telling you. This is your trend line you've drawn, and then allow also counter trend line to be break out from the counter trend line, let it retest before you join the sales. So I don't know if you understand anything what I've explained so far. You can ask your questions now, because I don't want this video to be too long. If you have any question, you can ask me now on this thing I've just explained. Use higher time frame. See very clearly if you're using higher time frames to see the direction. Higher time frame. Don't make that mistake of using lower time frame. Higher time frame. Always higher time frame. Allow breakout and retest to happen. If you have a trend like this, allow it to break out and retest your zone like this. Once you do that, your trade become easy. If not, then you not control emotions. That's how you control emotions when you place a trade. Should be afraid all the time. With that, you know that you are doing the right thing. So when you see sell, 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 like for instance, so many sales happen, don't just jump on board. Allow a pullback to happen to your trend line. Once a pullback happens to use your trend line, you draw this counter trend line that I've just drawn, let it break out and retest, and then you now look out for sell opportunity after the breakout and retest happen. So I'm going to post the video. The video is going to be on the academy, and the video is going to be on the channel as well for you to rewatch. So is anybody who don't understand what I've explained so far? Tomorrow we are going to talk another session, talk more on breakout and retest again. All right. I mean, of course, understood. If you have gotten what I've said, I've explained so far, can you type yes, yes, yes? If you've gotten what I've explained so far, can you type yes, yes, yes? If you've gotten what I've, somebody say partially, okay? You have to, okay? Maybe you came late, that's why you don't get it. All right. So yes, all right, yes, yes. So I can see a lot of people have gotten. They've got yes. I came in late. Yeah. So you got. All right. So go and apply this. Just use demo to trade it and see if it doesn't work for you. Once you use, thank you so much. God bless you too, Kingsley. Once you use demo to apply it, it works for you. Then you go real. Believe me, if you apply this pattern of trading, when you see market going down like this, don't just buy, sell because market is going down. No, you want to wait for a pullback to your trend line. You want to draw a trend line with a little bit with daily time frame and then bring it down to 4 hours. Like this is the 4 hours time frame trend line. You want to draw this kind of trend line and let it come back to your trend line. Then let it break out and retest from your counter trend line for an entry to happen. If you're just coming late, I was talking about trading on a trending market. Use higher time frame to analyze the market, know where the market is going to. First, know where the market is going to. Is it a downtrend or an uptrend? Know that first. Then, if it is a downtrend, like this is a downtrend, the market has to be coming to test this your zone, this trend line, for you to place a sell. But placing a sell here can give you problem. It can give you fake breakers. So to avoid that, you draw a counter trend line, like for instance here. All right, this was, let's say we've not seen all these ones playing out, all these other ones playing out, this down one playing out. Let's say just seen here. When you see market coming to this up like this, what you do is now draw, don't use 1 hour again, 4 hours to draw this. You can go to 30 minutes or even 15 minutes to draw that one here. What I mean, this one now, when the market was coming up like this, as it is coming up to your trend line, to this trend line, you now go to a lower time frame to draw, because you have to place a trade when the market gets to this trend line, right, you have to place a sell. But to avoid because fake breakers happen every day on this market. To avoid such kind of fake breakout, you draw this trend line, this small one here. There's an up movement here. This up movement that is coming down here. You draw it. Once you draw it like this, if it breaks out of this trend line and retest, this is 30 minutes. 15 minutes, you see the retest obvious. Once it breaks out of this and retest, that's when you place a sell. And that's when your sales will become more valid. Let me see in 5 minutes on this. Let me see if you can see a retest happen in 5 minutes. All right, like now, price struggle, break out. All right, near retest. Sometimes you can even go to 1 minute to allow that retest to happen. Let it, because this is an uptrend, but this thing can just start going to the upside. So let it break out and retest to happen. Once that retest happens, you sell, then your sell become more stable. You can see that this market is coming down. It's coming down. So that's it. That's how you place your trades in a trending market. Look out for a trending market. Always look out for a trending market. When the market is doing higher high and higher lows, a trending market is better to trade than a ranging market. Look out for a market that is trending. Be patient. If the market is not trending, look for another pair. This is V50. If V50 is not, V51S is not trending, go and look for another market that is trending that you can trade. Then you look out for pullback. When you see a pullback on a trending market, you draw this kind of trend line, this kind of counter trend line. Once you get to your trend line, this is your original trend line. Your original trend line is this one here. This one is the original trend line, but this one is just to enter a trade because price has pulled back to your trend line. You want to join in the trend. So you do this breakout and retest to join the trend. So guys, this is what I have for you today. I'll see you again tomorrow for another episode. God bless you all. I want to thank you and also congratulate you for those of you who are coming for the first time. Congratulate you for coming on board, and believe me, you have made the right decision by deciding to learn how to trade forex. But this forex trading can change your life if you are consistent and you are focused. You don't give up on yourself. You keep on learning every single day. Keep on watching the videos. Keep on reading the books about trading. You are going to succeed. So go out there and succeed. I'll see you again in my next lecture. At this junction, I'm going to draw the curtain. I'm going to draw the curtain at this junction. I'm going to draw the curtain. I'm sure all of us got value for today. So at the junction, I'm going to drop the. Of course, the recording will be available. It's recorded, of course. So guys, I'll see you again tomorrow. Bye for now. Good day, everybody.